Hey everyone, it's Michael Beresford here from Open Court for today's Property Wealth WOD workout of the day. Got a ripper today, and really it's focused around all of you first home buyers out there who might be seeing a whole lot in the media at the moment about sky high property prices and record household debt and how no one can afford what they've got, the exposure in the Australian marketplace and the fact we're in a bubble and all of that kind of emotive headline stuff, okay? The reality is a little bit different, and why that reality is different is because there are multiple facets that go into understanding different market segments and how the property market works and how the lending market works and how prices move as a result. I'm going to give you a snapshot on a few of those key things today, just so that you can get, I guess, a sanity check on how things work. So first and foremost, we're hearing about record median house prices, and in Sydney and Melbourne, absolutely that's the case. No denying that. There's definitely been a strong period of growth that's happened in those markets. Okay, but one of the, I guess, common mistakes that first home buyers can make is that fear of missing out, or fearing that they've got to get into the market at any cost. Okay, now if we have a look at that, let's say that this is the Sydney market. Okay, and back in 2013 was really when it started to grow. Who knows exactly where we are, whether at the top or here, but let's say that 2017 is around about here. Okay, and basically as a result of the APRA changes, investors have come out. There was an article in the last 24 to 48 hours on Domain, you may have seen, around how investor activity has dropped. We knew that would happen. APRA is having their impact, okay, and how first home buyers are basically filling the void, if you like, in terms of buying towards the top of the market. Okay, now that can be a risk for them, because they're feeling that I've finally got an opportunity, now I can get in. Okay, and why that can be a risk is because they can end up paying too much and overstretching themselves, as Dr. Shane Oliver, who's the chief economist at AMP, mentioned in that Domain article. Okay, I'd like to bring it back to basics and say, well, for the first home buyers out there amongst you, what are the things that you can be doing, okay, to understand where the best opportunities exist? Number one, it might not necessarily be buying an owner-occupied property in a hot market. Remember that at some point, there's always a market correction before the market stabilizes. Now, this is not a massive bursting of the bubble, so don't hang out for a 50% price drop or anything like that. But there will be opportunities here, and if you're going to be living in this property long term, that may make financial sense. What may also make better financial sense is to say, well, instead of buying at the top of a market, where's another market that I can look to maybe invest in a first property, but that I'm not living in myself? And if we use this same curve and say that this is, Brisbane for argument's sake, and you bought into Brisbane at this point, give it, say, 3 years, you may well have experienced significant growth, and that might mean a couple of $100,000 or more in terms of how quickly markets move when they do go through a growth phase. So think about what an extra $200,000, even after capital gains tax and so forth, might add to your deposit, and all of a sudden, in 2 years' time in the market where you want to live, it might actually make buying there more achievable, given the bigger deposit in terms of how you make your money work for you. And in the meantime, you can be renting where you want to live. Okay. The second point I want to touch on with respect to first home buyers is keeping all of these different moving parts in perspective. Okay. So if we think about this, let's revisit what a median house price is. Okay. A median house price is the middle value. Now, a $1.1 million median house price in Sydney sells papers, no doubt about it. The $8 million house in Vaucluse sells papers. But let's understand the fundamentals here. For every sale above the median, there's also a sale below the median. That's what a median value is. It's a middle value. Okay. So when we're looking at where first home buyers are active, okay, let's keep some perspective on this. First home buyers are not buying properties between $1.5 and $4 million, or at least the vast majority of them aren't, in the Sydney market today. In that Domain article, it mentioned that the average first home buyer loan was around $315,000 as a round number. So below the median is where the majority of the first home buyer activity is. Okay, so a message to all of you first home buyers out there, two things. Number one, keep these headlines in perspective. Don't feel the pressure to have to buy in at the top end, because that's not where the market for you guys is at. It's at an affordable level, evidenced by the data on what an average first home loan looks like. Okay, the people buying these properties have probably had property for 20, 30, 40 years. It's fair to say that people that are in their 45, 50, 55 have a much bigger income than first home buyers. So yes, they can afford to upgrade and take out a bigger loan, coupled with the profits of selling their previous house that's given them a massive deposit towards these more expensive properties. Okay. The second thing is explore other markets where you can boost your deposit by being smart about where you're buying to see an upswing to allow you to buy the slightly nicer property to live in, if that's what you're after. Okay, what makes financial sense and what makes emotional sense can often be two different things. Just make sure you're making an informed decision and not feeling that you have to get in at the top of a market. We'll see you next time.